we're going to cover the farmer's perspective, seasonals, and option strategies with ThetaFarmer from X. Welcome, Mike. Is there anything you're keen in on to watch, or are you just sitting on your hands? Are you waiting to see something specific? Anything?
I'm just watching trends in corn and beans. Once those get starting to move down, I'm going to get short. We haven't had a record crop for a few years now, but if we get that realized with a trade war, it's going to be tough.
Welcome to Hedge Heads, where hosts John Prishman and Ryan Tungseth discuss commodity markets, hedging, and anything related to trading futures. Remember, the risk of loss in trading commodity interests can be substantial. These are opinions only and not trading advice. While no one knows where the market's going, they're not afraid to share some ideas.
Well, today we have a special guest back with us. You guys may know him as ThetaFarmer from Twitter. I know him as Mike. We're going to welcome Mike to the show and get a little different perspective than we usually get on the podcast here. So, Mike, why don't you give us a little background? Where do you come from? You grew up on a farm? You've always been on a farm?
Yep. I'm born and raised on a farm. Went to school locally here to trade school. Got a degree in farm management. Advanced on to NDSU and got a degree in ag econ. Started trading at a great time. Got my brokerage license. Traded here for a while. It was kind of tough to get clients because COVID hit right at that time. So I couldn't really get out and about. Couldn't get in front of people. It was hard to meet people. Worried about spreading COVID. So that went well for a couple of years. Ended up teaching at a college, actually. And then trying to farm at the same time, that just got to be too much. So now I just farm and do some management advising for a couple of farmers locally and trade on my own. So.
Excellent. Where is your farm? Are you it's Breck area?
Yep,
okay.
Just around there. Yep.
Okay, so eastern North Dakota, or are you a Minnesota farmer?
Mostly western. We farm both sides of the river.
Okay.
Yeah.
Excellent. That's I didn't even know where you were located.
Sure.
So always good to know. So talk about the farm business. You're a younger farmer. I don't know if you want to share your age, but
I'm 28.
28.
So.
What is it like being a 28-year-old farmer compared to, does it make a difference? You're younger, more technology, more strategy, more, or?
I'd say more wanting to change things, wanting to do things differently, which is kind of hard, but I mean, you need a fresh perspective to grow or, not keep the status quo, I don't want to do things the same all the time, but I do like advancing technology. I think the next few years we'll see huge advancements, just what John Deere's coming out with. From what I've seen, watching farms grow and die, the ones that don't adapt to technology, they are left behind quickly.
I can definitely see that. How about the perspective? I mean, we're obviously from the hedging side, the commodity broker side. I know you got very involved you were a broker with us for a little while, but I know you mentioned in the past that school changed your viewpoint on that side. How did that affect your farming?
I'd say it changed the way I think of risk and thinking in probabilities. If you're going to plant a corn crop, you can estimate on paper, this is what's best case scenario, worst case scenario, and then kind of plot it based on probabilities of what you expect. And then you can, from what I learned at college, how to change that distribution to fit what you want it to look like. If you like what it looks like today at this price, giving this expected yield, you can hedge that and take that margin right now. So it's just being able to visualize that probability distribution of what can happen changed my mindset quite a bit.
So having the perspective of there's more than just grow the crop and sell it. Or
yeah.
I mean,
Right.
explain a little more to me from the actual producer side of what are your options when you're looking, and how do you consider those when you're looking to market a crop?
Sure. So let's just say it's, early May, like for example, right now, corn futures for December corn are $4.53. Do I like that price versus my break even of about $4.20? Not really. Can I hedge that now? Yes. Will that be the right decision? Well, I mean, I don't know yet. But I don't really want to cap the upside because you have a whole summer's worth of weather. So I'm probably not going to cap that distribution of outcomes to the upside. So I'd rather just buy a put, or a put spread going into summer. I don't want to cap it by selling futures.
Sure. For someone who doesn't trade options or hasn't looked at the market, what does that mean? That you're not capping the upside? How does a put not do that? Or a put spread? What are the advantages of those?
Well, you just sell futures, the value of your crop, you're canceling that value out with a short future contract. So by buying a put spread, you leave that upside price appreciation open if there's some weather scare of, a drought or a derecho comes through again. So leaving your upside open through the summer, following the seasonals is what just buying a put spread does. And it gives you a little peace of mind to sleep at night because I still have bills to pay. I still have land mortgages I need to pay next fall. So I still need to protect that value out there, but I don't want to give up 100% of it during this time frame.
So if you're looking, you said December 453, are you looking at short dated puts or are you looking at the December board? Where do you look?
For short dated stuff right now, like the value depreciates so fast, the theta decay is so high that I like to just keep it simple and keep it on the December contract. So volatility typically also peaks during the middle of June. So I'll go ahead and don't mind owning that through June. So I'll just buy puts and then reassess, come into early summer.
So with corn in the 450 range, what puts are you looking at? Are you looking near the money? Are you looking just outside the money?
Yeah, definitely looking at the money or even in the money. And then realistically, if corn does fall, it probably won't go under 4 because there won't be a lot of farmers selling pressure under 4. So I'll probably just go ahead and sell the $4 put to maybe pay for the $4.50, $4.60 put a little bit. I don't really need coverage under that $4 anyway with my crop insurance. So I'm already covered that low. So I don't need to double up coverage down there.
Okay. And so you're saying, like the money then out of pocket is you're buying in the money or right near the money put, and then you're selling something lower.
Yes. Yep.
And so the difference in those prices is what you're actually going to pay.
Correct.
Are you risking that whole amount? How long are you holding these? How do you assess when you're getting out or when you might look at it? What things are you watching when you do buy these?
So a lot of things I look at is just the overall trend in the market. We're just kind of sideways right now. I also look at levels. I read about this called the round number theorem in futures, where once price levels get broken or traded to, they usually continue to keep moving through that direction. Like take beans, for example. If November beans trade over $10, I'm probably going to get short. And then my stop's going to be $10. If it goes back over 10, I'll get out. Even if I'm not super bearish anymore, I'll just keep holding that position till it hits like another target of $9.50 or $9. So I just watch the trend. I try to be on the right side of the trend. But you still have to be kind of quick to get in and out. But if corn keeps falling, I'll keep those puts on. But if the forecast looks hot and dry in the middle of June, I might take it off,
Because you would expect price appreciation if the forecast is looking at.
Correct.
Okay. So being flexible is important, but also having that plan.
Yeah. I'm not married to a position ever. I can change my mind in a day or an hour.
Okay. A lot of people can't.
Yeah.
Is there a secret to changing your mind? Is it how you go into buying them?
It's all mindset and psychology. You need to pick a trading strategy that works with your mindset and psychology. You can try to learn it, but it's difficult and it takes time. It might take a couple of years.
Sure. So from that perspective, kind of that psychology side, how did you determine that was the best method for you?
A little bit of trial and error and some mentors. I mean, you're not going to add to a losing position. That's, for one, I'd run out of money really fast. And for two, it doesn't look good on the P&L at the end of the year. So it's just like a pain trade. You just have to learn to not like pain.
Sure.
So,
learn to not waste money.
yes. Yeah.
It's not that easy though, is it?
No, easier said than done.
Yeah, absolutely. How about, so you mentioned earlier, like when you're assessing those prices, you mentioned you had your corn break-even price right off the top of your head. Do all producers have that number? They know right away, or how do you establish that?
A lot of them do know that number. It's an estimate, really. You base off what you expect your crop to yield. You don't know what your final crop yield is going to be or your final expenses are, but you have a rough idea. So you just figure that out. It does change year to year. You need to sit down and do it in the winter. Most guys sit down and do a cash flow planning, and they'll do their crop budgets and compare crops. Like, what crop should I grow? How many acres? And you can calculate that number pretty easy. So most farmers don't know that, from my experience, down to like the penny. Maybe they might know within like 25 cents, but
sure. I know you had shared numbers on Twitter a while back, and some people there were some comments about the way you had depreciation in there, and I think you had your salary in there too. Some of those things that you shared, and there were some questions on how you calculated that. Are you unique in calculating some of those things, or how important is that?
Well, I mean, everyone's different. A lot of people think, I own the tractor, I own the combine, I don't have a payment on it, so that doesn't cost me anything. Well, it does depreciate, it does wear out, you do have repairs on it. If you need to buy a new one, that's not cheap. What's a new combine? $1 million now? And from the labor side, some farmers have so much money they don't need to charge themselves a wage to live, which would be nice, but I guess I do need to charge myself $50 an acre to have a living. But
makes sense. So you do calculate all those things in to your break even, and that's where you start basing all your marketing decisions off of.
I actually wouldn't base it off of that.
Okay.
Because the market does not care about my break even.
Sure.
So
good point.
If the market's going down and I see value in being short, I'm going to be short. So if the market's going up, I'm going to try to be long.
Sure. That makes sense. So do you only use the board for your marketing, or what other strategies are you using? I
like to speculate a lot. I do some decent spread trades, like corn and wheat's fun contract or spread to trade. It's pretty volatile being associated with wheat. I like to sell options when volatility is high. The ES collapsed over the past couple months. Being short puts worked out fairly well. Vol spiked an insane amount. Yeah. So some different things. How about like energies? Are you hedging those for your farm too, or? Typically not. I'm not a huge farmer, so I don't really need to, trade massive contracts in energies. I know there's some micros, but I'll sell some puts in crude oil if the prices collapse and then vol spikes for some reason. I don't mind getting in that, but typically try to avoid energies. I should get into it more because there's some volatile contracts that are worth trading.
Sure. How much, so you do speculate some, do you derive some income just from the speculation side then?
Yeah. Over the past 5 years, there's been 1 year where I haven't doubled my money.
Wow.
So pretty happy with that.
Yeah.
Yeah.
I might need some lessons. Talk about when you are hedging, I assume, your ultimate goal is to add to your price, right? You want to add at least some pennies to your bushel, or what do you?
I don't think about it that way. I just think about, okay, there's meat on the bone. Let's go earn some value. I don't think of it as much as per bushel or per acre. I'm just trying to make money.
Okay. So the huge part of hedging, right, is it's basically insurance, another form of insurance, right? Do you have that perspective as you're looking in, or are you trying to increase your money per acre? You just said you're not looking at it that way, but
for the most part, I'm just looking at trying to make money. Buying crop insurance, protects 70% of my value anyway. So there's not a whole lot for me to go out and, protect, since I've already bought that insurance. So I'm just trying to go out and make some money.
Okay. How about are you forward contracting with elevators at all, or doing anything that way, or what?
That kind of depends on how much capital I have. Is my problem. I make money trading, then I buy a train tile or land, which I should not be doing, I guess, but make more trading than farming, but addicted to farming. That kind of depends on how much capital I have. If I want to tie that up, like in the beginning, I would use elevators mostly for hedging, just because I wanted to focus on speculating more in my brokerage account. So I didn't want to tie up that money for short futures when I could use the elevators money. So it's kind of a combination of the two. There's no reason really not to, besides the cost of hedging at elevators, usually considerably higher than using a brokerage account. The other thing to think about, if you're hedging at an elevator, is the cost of rolling. Like if you're short December and the carry's really wide out to March and you want to roll, that roll fee's kind of expensive relative to using a brokerage account. But
makes sense. What about from on-farm storage side? How do you decide when you're selling your production? How do you make those decisions?
Well, typically I try to get short between May and June, sometimes July for the December contract. And I usually don't deliver in December because basis is usually the worst. So and when I have storage, so I'll store it out till May or June, and try to get some basis appreciation. So when December does come around, I usually look at either rolling or just lifting the contract and letting price appreciation work on the future side too. Then the other side of using grain as in the bin is the capital efficiency part. So if you have 5,000 bushels of corn in a bin, say it's worth $4, that's $20,000, and you're essentially long one contract, right?
Yeah.
So if you want to be long one contract in a futures account, that would require what's margin right now? $2,200.
Yeah, somewhere in that range. Yep.
So if you look at the capital appreciation compared to apples, which is essentially the same thing, 5,000 bushels of corn in the bin versus one contract, lawn one contract, your capital efficiency is way higher using futures, and your price appreciation is exactly the same besides basis.
But basis can be a huge deal. Right?
Sometimes, yeah. It's not as big. For corn, it's not as big as people think it is.
Okay.
Like, statistically, you'll probably get 20 cents locally in this area in most years. Some years it'll be more if there's a shortage around here. But you can assume what that appreciation is going to be just by yields locally. If there's a large crop in your area, basis appreciation isn't going to be really high.
Because more people have more corn to store.
Right.
Yeah.
Yeah,
so looking at those things, right?
Yeah.
So that, I mean, you have 4 contracts or 5 contracts or 10 contracts in the bin.
Right.
When you're storing those, you said you often will take that hedge off and let the basis appreciation or not basis. Well, that or
a part of it is just labor too, and the weather. Hauling in the winters. Not my favorite thing. So,
sure.
Yeah.
You don't like being out there when it's 20 below trying to get an auger to work and load a truck?
No. But I do like to deliver beans in November just because they're worth so much more and the capital efficiency is even higher there. So beans, yes, I'll haul in right away. I don't like storing beans.
So when you talk about the capital efficiency, can you define that a little more? Like what are you looking at? What does that do? What does having, I mean.
So we're in the business of making money, right? Well, some people just like to farm, but
sure.
If we can make some money along the way, great.
I guarantee all our listeners would like to make money and farm.
Right. Yes. That would be nice. So like if you're going to measure how much you can return, you can make a lot more money faster using futures than soybeans in the bin. Yeah. So it's breaking down the math of how much money you can make and how fast. If you're borrowing money while you have beans in the bin, like if you're borrowing for your operating loan and you have beans in the bin, it's hard to make that return back to cover the storage costs of that operating line and the opportunity cost of having beans in the bin. Like you could sell those beans and just buy treasury bills and make 4%.
Rather than paying 9% on your
right, yeah.
line or whatever.
Storage at an elevator, yeah.
Sure.
Yeah.
And some people are doing both.
Yeah.
They're paying on their note and they're paying the storage.
Yep. And that compounds pretty fast, yeah.
Yeah. So how does that math? I mean, can you break down the math for me just to make it sound like maybe you don't have an example because you don't do it that way, but like if we're factoring. And I understand producers want to have that, and you do have your corn, but and maybe it's more psychology than the math on it. But what is the psychology behind the math on that, if that makes sense as a question?
Well, I get that a farmer wants to be exposed to upside appreciation on their grain inventory, and they're kind of it's nostalgic a little bit almost. Like that's their inventory. They worked hard for it. They want it to be valuable. They want to wait out for a higher value. So I understand wanting to hold on to it. But next time I'm on, I'll come in with some math and we can go by the numbers. We could break out a whiteboard. But,
I like it. Then we get video too.
Sure.
We can do that. I'm holding you to video next time now with a whiteboard. But so if you do sell all your beans in November and you do decide you want some, want to have some upside appreciation, want to take advantage of any prices that go up, so you do something on the future, you also have downside risk without having the product there as well. So how do you make those decisions? Like, do you just sit on your hands then sometimes? Are you watching? What are you looking at to decide if you are going to pursue that?
I mean, that comes down to a little bit of the fundamental analysis of like what's happening in Brazil. Is it hot and dry? How's planting progress? Is there a trade war going on like we have now? You just need to look at what exposure you want. If you want to be long beans, there's nothing stopping you from getting long. Go buy 2 contracts. I like to follow the trends. I like to follow the spreads. If I want in, I'll get in. Yeah.
Sure. You're not reading the news?
No, I don't watch the news for much. If you read headlines, you'll end up selling newspapers.
Yeah. Well, that's a good classic one. Yeah. So you trade a lot of wheat then, since you like the trading scene.
Yeah. Wheat. I hate wheat. Poverty grass.
Poverty grass. I'm going back to Twitter or X or whatever, but I saw you just sold some wheat, so you must have had some stored.
I think that was corn.
Was corn.
Yeah, sold
corn.
my last
I looked at
40,000 bushels of corn. So there's a land auction coming up. I need need some capital ready to put down. So
I like it. Yeah. So your bin was your bank account for the winter.
It was, yeah. I was selling some calls against it to pay for storage. So
tell me how that works. So how would you take advantage of grain that you have stored?
Well, you're essentially long, and bins are the right to roll into the next month. So if I have corn in the bin, I'm not afraid to sell some calls against it. It's kind of like a partial hedge. too. It's like, I think it was like a Hayman's hedge, where if you're going to commit to that, putting that position on, you're protecting the value of the corn in the bin partially. It's not a full futures. And that delta number, that Greek, that's actually the value of one futures contract that it accounts to. It's like a 20 delta call is 20% of one futures contract.
Okay.
So I don't mind selling, 5 calls for one, for 5,000 bushels of grain in the bin, but I'm actively adjusting that.
Okay.
I do.
Are you selling calls in the current month then, or are you selling out in December of the next year's production? Or where do you look when you're selling against what you have in the bin?
So I usually go out about 40 to 50 days, because the theta curve, the time decay of options, is greatest from 50 to 20 days, the slope of that curve. So I'm bringing in that time value. And as soon as I put that position on, if I sell a call, I'll immediately put an order in to get out if it's like 50 to 75% of that value.
Okay. So to buy it back.
To get out, yes.
Okay.
Yep.
Yeah. How about from a stop perspective? What are you watching the other way?
It kind of depends. Usually corn moves pretty slow, and I haven't had that happen too much the past year. It did happen in like 22 and 23, and then I just flipped strategies to being short puts instead because the trend was up. Once the trend is going against me, I usually quit that strategy and close the position. So like you said, the trend is your friend, and you don't want to keep adding to a bad position. If I am short calls against inventory, I completely don't mind being short against it. So it just kind of depends. I'm not stuck to, one strategy, or I'm not committed. I don't mind taking a loss now and then.
Sure. And you have that. And now you talked about the curve from 50 to 20 days. Are you getting out of those at the 20 days then, or when it hits the number?
Too. Yep.
Okay.
Even if it's not at my price target, I'll still get out.
Okay. So you're not planning on holding till expiration. You're kind of heading in with a plan, both when you're going to buy, when you're going to sell.
Yes. Yeah.
And you have in mind what's too much against you.
Yeah.
But then you don't ever let your brain take over and say, "Oh, I just add 5 more."
No,
average this
don't
up.
average into a loser. Remember, I don't know what rule now that would be 3.
Rule number 3: don't average a loser.
Yeah.
Okay. Perfect. Talk a little bit. You mentioned like we're in early May now, and we're coming up to a whole bunch of seasonal windows. What are you watching now as we head towards June, as we head into July? Are you looking to add positions, change positions, any seasonal items that you're watching?
Yeah, I'll be looking to convert some put spreads into just short futures, probably coming into middle of June. Statistically, corn typically tops out between early May till the middle of June. So this is a critical window to start getting short or protecting value for your crops. Like I said before, if beans close under $10, probably going to get short beans. This won't make a lot of friends, but I think there's a lot of risk premium in beans right now. When the last trade war happened, beans were down to like $8.50.
Yeah, I know we saw $8.90 for a long time. I don't remember what. $8.50 is pretty accurate.
What are November beans now? $10.30?
I thought it was like 10.40. I do have the chart here. Let me tell you. Yeah, 10.33 today was the close. So,
and let's see, if acres are wrong coming into May, when does the acreage report change? I don't even know. July. If acres aren't as what they expected with everyone planting corn, say we have more beans, then take off 300 million bushels of exports that we're not sending to China, and put in a good bean yield, bean balance sheet gets really big really fast.
I can see how that would adjust really quickly. What does that do to corn, though?
Probably raises the corn price. Carryout would obviously be lower. So that would be good for corn. But
Yeah. We have not hit my number on corn yet. So
what's your number?
I said back in December when John and I laid our little bet that I was going high with 97.1.
Oh, yeah.
Yeah.
Yeah. USDA seems to always overestimate corn acres, but
Not that much.
time will tell.
We'll see if it hits. So far, John's winning this bet, but it's on a past podcast. So.
Here comes 250 corn.
Yeah, we don't need that again.
Don't need that.
It's sat there for a long time.
Cattle guys would love that.
Wouldn't they?
Yeah.
That might help the
cattle prices. Wow.
Yeah, except that one guy who's not making money on cattle.
That poor guy.
That poor guy in South Dakota.
Can't figure it out.
Feel so bad for him. Do you want to talk cattle at all? Do you have any thoughts on cattle? Are you trading cattle at all?
I did trade cattle a couple weeks ago. Meat Idea is a great follow. Billy Ray, whatever his name is on Twitter.
Yep.
Yeah. Cattle is a fun contract to trade. I don't know anything about cattle, but I know steaks are tasty.
Steaks are tasty.
More about cattle, but I think timing a short in cattle is someplace to do your homework over the next year.
Yeah. How about from a hedging side? I mean, I know you don't trade cattle. You don't know much about cattle. What would you be looking at, like, if you applied some of your grain positions or grain thoughts in trying to find that if you were a cattle producer?
I'm not sure if the option liquidity and volatility is quite the same as the grains. So I guess without knowing much, I would just stick more to using futures.
Okay.
Yeah, plan your inventory, plan your cattle cycle, and manage your risk, because there's a lot of value out there for cattle farmers.
Yeah, there's a lot of options. Yeah, they definitely earned it. I hope they're making hay these last years, and everyone says 3-year cycle, so let's go cattle.
Yeah.
See, I mean, I still want cheap steaks though.
Oh, can't beat a $9.99 steak in Fargo.
Yeah, I keep meaning to make it up there. Maybe this Thursday. We'll see what happens. Talk to me a little more on option strategies. Like, are there any other complex? You talked about the spreads that you'll use where you're buying one put and selling one lower. Are there other specific strategies you use? I mean, we always talk, you can go crazy on strategy. Like, you can butterfly, you can whatever, what I mean? But do you just use a put spread, or you're buying a put or a call spread and calls, or are there other strategies you're using?
Sometimes I'll sell futures and sell a straddle against it.
Okay.
I kind of like that method. I think that's called a double up at the elevator.
Okay.
Or accumulator. I don't know how they actually trade an accumulator over the counter, but I kind of like that strategy. It doesn't dedicate you to, it does have a risk to doubling up on the upside, but on paper you add a lot of value to the bushels you do sell. Okay.
So you have 5,000 bushels. I mean, you're producing, right? So you're going to sell one contract.
Yep.
And then you're going to sell one straddle as well.
Yeah. So let's just look at D's corn right now, for example. We're at 450 corn. So I'll sell corn futures at 450 and sell a straddle. Let's say I don't know what it is right now. Say it's 50 cents. So then I'll add 50 cents of value. I'll end up getting long again at $4 to the downside. And I'll be short another contract at $5, which I'd totally be all right with.
Okay. Yeah, because you have the corn in addition to that, right? So it's actually you're evened out between your production and your what's on the market.
Unless the top end doesn't hit, then there's 5,000 bushels that I should keep exposed in case it does double up. So I just still have that 5,000 bushels at risk.
Okay. Yeah. So how much of your production are you hedging? Like when you look out?
I like to hedge up to my crop APH. So that's usually about 75%, 80%.
Okay.
What I buy insurance on. So that's usually what I roll with.
Okay. And do you are you hedging, are you looking at 26 at all? Or are you only working with the year ahead?
When prices are low, I usually only look at the year in front of me.
Okay.
But if prices are high, like they were like 2 or 3 years ago, I don't mind looking out, doing a chunk, get started somewhere.
Sure.
Hope it's my worst sale. Ends up being my best.
Sure. So you might do what, like 10 or 20?
20? Yeah, that's fine.
Okay.
A lot of people talking, they don't know what fertilizer is going to be or whatever, but it's still a good price.
If you have another Ukraine war situation where prices did that, you might look out a year or two.
Yep.
3.
Yep.
5. Maybe should have. But perfect. Any other strategies that you look at, or any other things guys should look into?
I'd say if guys want to learn more about volatility and how that affects option prices, look at seasonals, not just of price, but of seasonals of volatility too, and to know when to use certain strategies based off of that. I think there's a lot of value guys can realize if they learn those two things.
I like that. We do talk about that a lot on the podcast, or I mention it. I'm more of an option trader. John does more of the spreads and the futures themselves, but you rarely want to sell on low volatility, right? And you rarely want to buy on high volatility. And a lot of people don't even know where to look to know which one it is right now.
Right, yeah. So a lot of guys will go into the middle of June and buy puts, but volatility is really high. And volatility is often correlated with price appreciation. So when prices go up with the risk premium from the weather, volatility go up. So then they'll buy that. And then prices will fall and they'll lose all the value in the puts because volatility gets crushed too. So you need to know how to be more vol neutral in those windows to not get crushed by vol collapsing.
Makes sense. Yeah. Also, much easier said than done.
Yeah. Right.
Perfect. Well, I appreciate you being on today, Mike. Is there anything you want to add? Anything you think guys should know?
I would say get ready to hedge some risk the next month or two, because we're still in a trade war with Trump and there's still a lot of headline risk. So,
and not to mention a whole season of weather risk. So
that's true.
We could weigh all those things against each other.
Yeah.
What's your overall view on the market right now? I guess I'd wrap up with that. I mean, I feel like this has been one of the toughest springs. I mean, those things we just talked about, there's trade war, there's still weather window, there's still seasonals, all those things. Is there anything you're keen in on to watch, or are you just sitting on your hands? Are you waiting to see something specific? Anything?
I'm just watching trends in corn and beans. Once those get starting to move down, I'm going to get short. We haven't had a record crop for a few years now, but if we get that realized with a trade war, it's going to be tough.
Yeah, more than tough. All right, yeah. Look at the prices in 18 and 19, right? I mean, most guys probably don't need to be reminded of that.
Yeah. We can count on government payments, I guess. Trump will come in and save us. Knock on wood. But yeah, it'll be an interesting year.
It very well could be. Yeah. And if you don't like prices now,
just wait.
Do you like them later? I mean, it doesn't mean the opposite can't happen. Maybe the trade deal is that they're taking untold bushels this year, right?
From China? I doubt it.
Okay. Well, they could. There's my bull case.
I hope I'm wrong.
I'm going to say just make sure that you protect what you're growing, right?
Yeah, absolutely.
Perfect. Well, thanks for joining us today, Mike. And we look forward to the next time you're on with a whiteboard.
Whiteboard. Yeah, it'll be fun.
And we'll post a video clip on X then with whiteboard.
Sure.
Awesome. Thanks, Mike.
Yep. Thank you.
You don't have any gym stories, or you want to talk about your latest date? I saw a tweet about that.
Oh, the date went really well. Oh, that horse girl went really well.
Did it?
Yeah, I liked her a lot, but it's just can't do it.